My favorite thing to do when like news like this comes out is check out All Sides. We talked about All Sides before, where it talks about the news outlets, and let's just listen to the far right versus the far left reporting on this. Far right said core consumer prices rise less than expected for fifth straight month. That was their reporting. And then from the far left, it was U.S. inflation rose in June as Trump's tariffs start to show in prices.
Every time. Like, it's just confirmation bias. You hate Trump? Here's an article for you. You love Trump? Here's an article for you.
Welcome to Drunk Real Estate.
Grab a drink and enjoy the show.
Hey there, welcome to episode 103 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband. It's getting harder to say. Once you get in the hundreds, that's a tougher number to throw out there every time. But we only have the three best friends that anyone could have for this episode. Mauricio, I don't know what he's doing these days. He's buying ranches, he's getting stuff delivered, he's got issues, so he couldn't make it this episode. We didn't get a guest. We thought we'd keep it a short one here. But I do have my two best friends, starting with Jay. How's it going, buddy?
I'm going to take a little bit of responsibility here. I'm normally the one that reaches out and finds a guest, and I had somebody in mind. He ghosted me, didn't respond. I'm actually a little upset. So I waited till today to reach out to a couple other people. They weren't able to make it. So
is that why you were having that little like crisis introspective earlier, where you were like, "Am I?" Like, is it because you couldn't find a guest? People were ghosting you?
I think it's important to ask that question every once in a while because I'm hoping one day the answer changes.
No, I already know.
Oh, me too.
Speaking of which, you better be drinking.
I am. I am. I decided to go a little light today. When going with the white wine, Sauvignon Blanc from California, called On the Line. No idea what it is, but I figure if Mauricio can get away with drinking white every once in a while, I'll give it a try. So
once again, hasn't opened it yet, but
there
it is. Okay, I see it. All right, fair enough. AJ, what's going on? Or should I say your mom? That's your name on Riverside right now. How's it going, man?
Going good. Some things you never grow out of.
You're in a closet again.
Yes, I am. I'm in Newport Beach, so I'm down here in meetings. So I'm coming in from a hotel room here.
Is the weather better or worse than Idaho? You were praising the Idaho weather before.
Right now it's actually better because it's really hot. We had this huge heat spell, and so it's nice and cool here. So I'm really freaking enjoying it.
Well, the important question is, do they serve Diet Coke in the closet there?
They do. It's not here yet, but they'll be here soon. So
room service showing up soon. That'd be great. We'll make sure to edit it so that it's on you as room service shows up. Hopefully they bring it right in and just serve it to you. All right, let's get right into this.
Wait a second. What are you drinking?
Oh yeah, that's true. I grabbed some 1792. Small batch is one of my preferred drinkers. I did see the Still Austin. I left it over there from last week, and I was going to throw it out again for you, AJ, but I'm going to go with 1792. Pour a little bit in here. This is one of our cups actually that we give out to our investors too. It's got the etchings on it and stuff, so pretty excited about that. But we got to get in this. I got to start drinking quickly because if it's going to be a short episode, I got to catch up real quickly. But we're going to talk inflation, because that just dropped this morning. Jay, I'll let you set it up. But depending on what news you've been reading, depending on what news outlet, it either says U.S. inflation heats up to 2.7 or U.S. inflation, core inflation, lower than expected. So, Jay, why don't you tell us, is inflation higher than expected, lower than expected, okay, panic? Where are we at right now?
Yeah, I'll answer that question, but I kind of want to build up to something that I'm really concerned about. And it's not strictly based on the inflation data that we saw today, but a broader kind of overview of what's going on in the economy. And so I'll start with inflation because that plays into it. But ultimately here, I kind of want to get into something that I find concerning that I don't hear talked about very much as of yet. So, like you mentioned, yeah, inflation, depending on how you look at it, ticked up in June. It's been really low the last few months. So, it did tick up in June. But given how low it's been the last few months, that's not necessarily a big deal. It was more than a tiny tick up. The June number was larger than the previous month, larger than the previous 3-month average, larger than the previous 6-month average. But it wasn't a huge spike. In fact, I would say that if we weren't sitting here worrying that tariffs were going to lead to inflation, if we had no other reason to believe that inflation was going to be an issue, we would have looked at today's report and said, it's a little bit high this month, but big deal. We'll wait and see what happens next month.
Right, but like this was the month though, right? This was the one that everyone was like, okay, the tariffs, this is the first month we're going to see tariffs hit.
Yeah, I mean, we've been saying that for there are people that thought we were going to see it back in March, April, May. There were people that thought we weren't going to see it till the end of summer. So nobody really has any idea. But I think everybody's kind of been wondering, hey, are we going to see it and how bad is it going to be? And so this could be the start of that trend. We don't know till next month. And again, it's not so bad that if it weren't everybody sitting on the edge of their seat waiting to see what was going to happen with inflation, it wasn't so bad that we even probably would have noticed it. But here's why I think there's a bigger reason to be concerned about today's inflation read. And let's pretend that it did go up a little bit. So let's pretend like I'm talking from a place that it went up a little bit. Not a lot, but a little bit. Here's why I am concerned. First, remember that market determines prices. When you buy something at the store, it's not the seller that determines how much they're going to charge for that thing. They don't get to decide how much they're going to charge. The market charges, or the market determines how much you're going to charge. And normally, price inflation only happens when there's a good bit of demand from buyers. So let's take an example. We're in the real estate business. Let's say I have a house and I want to sell this house for $400,000. But the market says it's only worth $350,000. Doesn't matter that I want to sell it for $400,000. Doesn't matter that I might need to sell it for $400,000 to pay my investors. Doesn't matter that I may have spent too much on the rehab and I'm into it for $420,000 and I need to sell it for at least $400,000 to get my money back. None of that matters. All that matters is the market says it's worth $350,000, so it's worth $350,000. Doesn't matter what the seller wants. And pretty much the only thing that would make my $350,000 house worth $400,000 would be is if there was an uptick in demand from buyers for houses. If more buyers were looking for houses, if more people wanted to buy houses, more demand, that would increase prices. But without that demand, prices don't have a reason to rise. So let's get back to the concern I was talking about. If prices went up last month, if we saw price inflation last month like we did, everybody's probably thinking that that means consumer demand went up. People were demanding more goods, and so it was driving prices up. Because again, sellers don't determine prices. But it turns out that consumer demand probably didn't go up last month. We haven't seen all the retail sales data from last month, but we saw the retail sales data leading up to last month. And what we've seen is that retail spending and consumer demand has fallen off a cliff the last few months, actually since the beginning of the year. Consumer credit spending last month, which we did see, was about half as much as what they expected. It was $5 billion in consumer credit spending by Americans versus $10 billion, which was expected. So in other words, consumer demand is dropping considerably, but prices are still going up. And so my concern is that for this to happen, for demand to drop, but prices to still go up, there's got to be a lot more price pressure on businesses than those businesses are passing on to consumers. Meaning there's probably a lot of upward price pressure that isn't being reflected in the inflation data. There's probably more price pressure on these goods than what we're seeing passed on in the CPI data. And this tells me that moving forward, one of two things is likely to happen. We're either going to see more persistent inflation. So if demand picks up, we're going to see higher prices reflected, or we're going to see a much bigger economic slowdown if prices are going up and there's not a lot of demand. Possibly we could see both. If we see both, that's called stagflation. I'm not going to worry about stagflation. Again, that's something we've talked about in the past. And yeah, it would be a really bad thing to happen, but it's not typical. But long story short, the fact that we're seeing rising prices at the same time that we're seeing falling consumer demand is really terrifying.
Terrifying is a really strong word because it was down 0.1%. So it cooled down, which when you look at it, cars was one of the major drivers of that. which is directly affected by obviously interest rates. And the slowdown that we're looking at, I mean, it's 0.1%. That's not that much at all.
Yeah, but if you dig into the data, and let me pull up the data here for those that are watching this on YouTube. If you look at the data, here's basically a list, high level categories of that CPI looks at, that inflation looks at, and basically 0.2% increase per month equates to about 2.4% increase over the course of a year. 2.4% is kind of where we want to be. The Fed says 2%. Historically, it's probably closer to 3%. So somewhere in the 2.4 per month is about where we want to be. Everywhere that we see a June number that was higher than 0.2%, we are higher than our target inflation. So we see that we saw that for non-core for all items, 0.3%. Food, 0.3%, food at home 0.3%, food away from home 0.3%, energy 0.4%, gas a whole percent, which equates to 12% per year, fuel 1%, energy or electricity 0.9%, gas 1%. I mean, if
Yeah,
you
but
look at these
that's
things,
kind of
okay,
why they have this core number. And if you keep going down one more line down there, core was only 0.2 for the month, and that's
core
right
was
in
zero point
line.
0.2, but if you look at the individual categories, core was 0.2 because there were a couple things that dropped significantly. So used cars and trucks dropped significantly, new cars dropped significantly. That factor, that plays a lot into the overall number. If you would have removed those out, core would have gone up a good bit. And so
Right. And then, but you can make that argument for each one, like, oh, take this one out, take that one out. Like it's a whack-a-mole thing. And like, if you talk about like, so what were the high ones? The only high one was really that stood out to me that was like tariff related was apparel, right? Apparel went up 0.4, and that makes sense because a lot of our apparel comes from China. But
Actually, I got a screen. If we want to look directly at what was hit by tariffs versus not and the combined, there were only a couple actual here we go. So when looking, the vast majority of all like inflation data that we can look at. There we go. Can you guys see that? Hopefully everybody, I'll try to walk through this online. So utility, like gas, like nat gas was huge. Energy services, electricity, food away from home, shelter was huge. Medical services, transportation, food. But if you see here, blue is non-directly affected by tariffs. Yellow is directly, and gray is mixed. So when looking at that, we don't see anything that even really surpasses 3%. In fact, the things that have direct impact by tariffs are actually some of the things that have been moderately to down low. We have
there were a couple other things too, though, that aren't reflected in that graph. Like if you look at household furnishings, they were up a full percent over the month, and that's a 12% annualized inflation. If you look at, as I said, apparel 0.4%, sporting goods were up 1.4%. Sporting goods, as you
that's
know, comes
captured in
a
all, well, you have the baseline of all items, but when you're looking at these baskets, like you said, you have these baskets of subjects. So you could pick out, okay, furniture, or you could pick out this one piece in consumer goods, but then it's offset by another drop. And that's why you got to look at like the category of it, or you can just line item into, okay, well, we could line item, blankets.
see, I don't like this chart for the very reason that this chart represents the last 12 months averaged. And so this chart basically says this is what we've seen going all the way back to last July. This goes back far before tariffs. And so you saw at the very bottom of that chart that gasoline was down several percent, but it was up over 1%, so 12% annualized last month. And so looking at
No,
an
that's natural
annualized,
gas. You're confusing gasoline and natural gas.
sorry,
So no, this chart is from this latest. All it did was took the actual labor statistics from June, the latest one that just came out today.
no, it said at the top of your chart, 12-month annualized or 12-month.
Yeah, I mean, gasoline in general, though, like all things energy and gas, like that's a very volatile and like it's very difficult to put a finger on exactly one thing that's affecting that because it changes so much. Like 1 month it'll be up because of this, 1 month will be up because of that, 1 month will be down because of this. It's you can't really attribute any kind of averages in gasoline to any specific thing, especially tariffs.
My biggest point is with consumer demand dropping as much as it has the last few months, I would expect prices to be going down. I'd be expecting disinflation, not any inflation. And so it makes me wonder if we saw the same consumer demand we
But
saw.
the largest driver of inflation had nothing to do with consumers. The largest by far was energy, healthcare, and shelter. So that doesn't make sense.
Yeah,
You see what I'm
and
saying?
we have our own problems with shelter too, right? Like with how they
Yeah,
calculated that
but
owner's
again,
equivalent
that's the
rent.
annual number. I showed the chart that was directly from the June CPI, and I pointed out all the places where we were above our target. Um,
Yeah, but then you have all the places that were negative that we didn't go through. So we can open it back up and go through all the negative ones.
Yeah, the most notable to me, which I don't think any, I haven't seen. I looked for an explanation. I can't really find one. Is the used cars and trucks, right? Because like that was a big news story. What was it, a month ago? About how the price of cars and trucks they're going to go way up because all these tariffs and stuff, and
it's because that's part of discretionary spending, and when consumer spending slows down, people tend to keep their cars and trucks longer. They don't buy as many automobiles.
No, they're not buying automobiles because interest rates went up 4 times. So go talk to any auto shop dealer. If you want to go buy a car, what they had is all financing vehicles prices went down. But guess what happened to used vehicles? Cheaper used vehicles, prices went up. It's not about them choosing or, oh, a tariff affected this car. It's about I can't afford it because my monthly payments went up 4 times.
well, but this month used cars and trucks were down 0.7%, and new vehicles were down 0.3%.
Yeah, they're all down overall.
I get the whole like interest rate thing, but that's we've had high interest rates for a while now. And for all of a sudden have this month just be such a big drop, I just thought it was super interesting. And I couldn't really quite, you can hypothecate, but like at the same time, like we could say household furnishings. Oh, tariffs are hitting those. Recreation, apparel. Those are all things that tariffs are hitting. If we're going to say tariffs are hitting something, to me, it should have been vehicles right now, and they just didn't.
I don't know why that is. My speculation is just that it's a big ticket discretionary expense. People are foregoing buying it, and when demand drops significantly, prices are going to drop. Which is again why I was surprised to see an uptick anywhere in CPI, because with demand dropping, I would have expected prices across the board to drop. And so we didn't see that. Again, it's not looking at this data today, nobody's thinking we're back where we were when Biden, like in 2022, where we were going to 9% and everybody was freaking out. That's not a concern. But it is 1 month, and maybe it's a 1 month anomaly, maybe it's 1 month part of a trend. But it's worth considering that it's a little bit more surprising that we're seeing this month at the same time that we're seeing reduced consumer demand.
I guess that's the big news is right that everyone to AJ's point earlier, like everyone said June was going to be the month that we were
Well,
going to see
they said
this.
that May was going to be a month. The April was the month. So like when you look at it, not only have they never been the month, like the idea that we were going to go into recession, we were going to all of these things that were supposed to happen, which tariffs are absolutely inflationary. So the biggest thing, and this is what everybody's been talking about, is like, why in the world are we not getting massive inflationary effects? Like all the economists, the Wall Street Journal had that thing on the aggregate economist, uh, said tariffs and what tariffs we're going to do. Today, the odds of recession that they're all putting has gone way down. The driving reason is they're like, we don't see massive inflation now from.
Well, so what's your theory, AJ? What's your theory as to why, if you self-admitted that tariffs are inflationary, why haven't we seen it?
Tariffs are inflationary if you live in a world where you have 1 plus 1, then it equals 2. But guess what? We don't. We have 1 plus pick what you want. So when you have tariffs that come from all sorts of different areas, and there are all sorts of different tariffs, and you have choice in a marketplace, they're not nearly as impactful. So I think that the idea when we looked at, and everybody's like tariffs, principally they just looked at China and they took it and they're like, oh, this is going to be ginormous, it's going to be massive. But then we excluded out that we actually have options in a marketplace that people can go, we can choose other things. Some things you can't, and yes, that leads to inflation in those items. And in fact, some things are going to be really high, but inflation is not a 1, 2, 3 item thing. There's choice. Some people make choices, they move around, they do other things. So the impact of it too is not the same because you have choice from business, choice from consumers. You also put into the fact that you have businesses that are trying to gain market share. So you're now having competition amongst businesses to gain market share. They're taking on more of that cost. They're changing their allocation of capital. It's the economy doesn't work like that. It doesn't
Wait, I
work
think
on a
that might be an
spreadsheet.
important point. So you're saying that now, like as a business strategy, there would be some businesses right now who would probably be eating costs, maybe even losing money because they see the opportunity to box out other competitors and gain market share so that maybe in the backside of this that they're going to come out smelling like roses.
Or what happens is you had one company that directly ordered from China and they're stacking up in, let's say, 4 or 5 retailers. Well, then all of a sudden they're not price competitive, but another company that went to wherever, the Philippines, they just quadrupled their orders and now they're shipping and replacing it. So I think the problem that you have with some of these like kind of overall theories is once again they're total theories, and also that when they're in practice, it doesn't work like that. You have options. People can do different things. We can move around, and I definitely venture to say that we had like how much was it that the government raised the amount of money that came in. I mean, talk about a boom. We had huge money that was raised from tariffs, and yet we had virtually no consumer impact from tariffs. I mean, that's a
Well, it's
win.
hard. Again, there's a lot of different places we can see consumer impact. The fact that consumer spending is at is contracting immensely is impact.
Immensely point. What is it? Point one
It was so it
percent.
was down 60% between Q4 and Q1.
Yeah, but I guess can you attribute that to
60. If
tariffs though?
okay,
Like
Q1 and Q4. If we had consumer spending drop by 60%, our entire economy would crater.
No, it was 4% growth in Q4. It was 1.8% growth in Q1. That's a 60% reduction in growth.
It's yeah, once again, but that's the rate of growth. It didn't go backwards, it slowed down. And all of a sudden you're sitting here going, we slowed down consumerism, yet we raised all of this money for the government. I mean, like, when you look at that, once again, tariff or the most inflation that we have today, bar none, is shelter, it's gas, it's energy. And these things are so big of an issue and they outweigh so much that it changes the whole basket of goods and everything that you're looking at. So I think that it's, I mean, what we're looking at here, first of all, everybody in the first quarter, all economists and everything else, it completely defied what everyone said. Like completely defied. It defied what we all said.
I disagree.
How? You said unemployment would rise to 8%.
Let's be clear. Tariffs at the level that we were talking about were in place for a week. And then Trump came out and said, I'm going to pause it for 90 days. And he said, as of July 9th, we're going back. Well, here we are. It's July 15th, and now it's August 1st. We're going to go back. What's going to happen on August 1st? August 1st is going to be, I'm going to give another reprieve. So, yeah, the original tariffs that we were talking about never actually happened. And everybody's acting as if all these predictions we had based on the tariffs that were originally announced, but then were put off for 90 days, Yeah, it didn't happen. But the point is,
No, no,
if
no,
we
it did. We
believe,
rose tariffs massively.
Well, yeah, there's still the 10% blanket tariff. There's still some tariffs on other countries. We still have some, yeah, we still have some tariffs. As I said, we have the blanket tariffs. We still have, we don't have any of these crazy tariffs enacted yet. But like, obviously, like, it's very scatterbrained, right? The whole tariff thing, like, no one knows what's going on. I don't think he knows what's going on, but it's some aspects. He's almost crazy like a fox in this, and that, like, in the first time he did it, everyone freaked out, right? The markets freaked out. The yields went all over the place. Like, it was pandemonium to the point where he actually, for the one of the few times in his, in his political career, where he kind of backtracked, and he learned from that. When he implements tariffs now, they're very loose. They're very loose. They're very, like, he'll be like, "This is happening August 1st," and it's to the point where reporters kind of know, and they ask him, "Hey, like is this set in stone? Is this 100%?" And he's like, it's not 100%, but it's very firm." And they're like, 100% firm. He's like, not 100%, but firm. And so, like, he's gotten to this point where he makes announcements on tariffs and he does these things, and you don't even see market movement. You don't even see people kind of react to them. And it's created this thing that I have the theory with what's going on with the tariffs is someone's eating them, right? Like, as AJ said, there's prices are up. People are spending more money. It's just which people. And I think, like, the problem is, you could go turn into one news station, you see one story of X suppliers paying so much more, but then the next person, it shows the person on the back end's paying more, and like, there's different stories. But I think it's moving around because everyone's kind of still, because Trump is so back and forth and changing things, people are still kind of just waiting and seeing, and they're willing to eat the
But
tariffs
the
because they
market
don't.
isn't. We have $2 trillion in the United States manufacturing and data centers, everything else that have already been announced, planned, and are moving forward. I mean, you have the big move from Apple, but I mean, since early 2025 now, we have $2 trillion in US manufacturing and projects that are coming. And a huge portion of that is, we're talking like data centers. I mean, this is in, when is the last time that we had $2+ trillion that was coming in to the United States for manufacturing? This is wild.
the last time was under Biden when all the same companies promised to do it and didn't do it. And the time before that was under Trump when all the companies promised
This
to do it
isn't
and didn't
planned.
do it.
I'm not talking about planned. If we want to go to planned, we can talk about planned. These
Yeah,
are
but we also
actual
had the discussion before about how many companies are or not necessarily just companies, like how much cash is sitting on the sideline. And so I do think there are some companies, like, if you bring up someone like Apple, like, talk about war chest, like, they're not necessarily making decisions because they're not that sensitive to interest rates. They're not that sensitive to small fluctuations. They will make decisions based off of opportunistic or based off of where they see the markets going. So, like, there is definitely opportunity, but, like, the point that I was trying to make there is, like, the end consumer's not seeing the inflation right now yet. So who's seeing the inflation and who's eating this? Who's If the consumer's not paying more, and use the example of, like, Walmart, right? Because Walmart was very vocal about, hey, we're going to have to raise prices. And then Trump came back and said, you better not, you have to eat that. And we've already talked before about a Walmart, like, their margins are like 3%. So if you're seeing 10% tariffs, like, what that going to do them? And someone like Walmart, they have power, right? They're a big, powerful company, and they're going to be able to tell their suppliers, "Hey, you got to eat this," and their suppliers are going to eat it to a certain extent. Especially when we're at this situation where Trump seems to flip flop on what his tariff policy is going to be on each country, by the month, by the week, by the 90 days, by whatever, that they're willing to, okay, I don't want to give up my relationship with Walmart just, for a couple months of negative losses. But then on the other side, you have the small businesses who are saying, hey, like, maybe in some instances you see stories of them having to eat these costs because they've made commitments and The point is I guess that I think this Trump has created this wait and see atmosphere by because he doesn't want to spook markets and he doesn't want to have this effect on consumer prices and things. And he's whether he's figured out or he's kind of just stumbled on it that if he kind of just keeps pushing off and pushing hard and then backing off, pushing hard, backing off, doing these things, then the consumer doesn't end up being the one eating it yet. And I just don't know how long he's able to tightrope that because maybe he can soft landing it. Maybe he can, pull off a bunch of these actual, I don't think he has a single actual trade deal yet, but maybe he could pull off a few of these and stick the landing because at the moment he's walking a tightrope, but he seems like he's doing okay.
Well, we're going to see tomorrow PPI inflation. PPI stands for producer price inflation or increase inflation index. Sorry, producer price index. Already drinking too much, which basically measures wholesale costs, so intermediate costs to manufacturers. So how much manufacturers are buying raw materials, how much retailers are buying from wholesalers, and wholesalers are buying from manufacturers. And that'll give us a good bit more insight tomorrow on whether retailers and manufacturers are seeing increases in prices and they're eating those prices, passing them on to consumers or something else. So tomorrow we'll get some data that'll be out by the time this drops on Thursday. That'll already be out. So look for the PPI data. Maybe we'll talk about it next week. But I did want to go back to, I think that there is a very significant impact that we've seen. And yes, AJ, you're right. In Q1, we did not see a contraction in consumer spending and retail sales. We saw a slowdown, a 1.8% slowdown. So January was highly negative. February was about zero. March was pretty high. But let's look at Q2. In Q2, we actually had a slowdown in April. We had a huge slowdown in May, 0.9% for the month. Tomorrow or Thursday, I think it is, we're going to get retail sales data for June. So, but unless
we
that
had
number,
those in the year prior on your own chart, you can see without tariffs.
yeah, we had some small
So
decreases.
this is the problem to take out like a 1 month thing and go, this is it when we had decreases and we have. I mean, if you look at that, you go, okay, let's take this just on the year, for example. We have CPI is running at 2.7, yet incomes raised this year are over 4%. The United States had the first month surplus in what? Nothing in the 2000s. The United States had a surplus of $87 billion. Incomes are higher than any core inflation that we have by a lot. We have a surplus in the government. I mean, these are terrifyingly amazing news that we haven't seen in, I mean, two of those we haven't seen in at least 5 years. And we haven't seen.
Let's not pretend we have a surplus in the government. I mean,
we did last month. There was an $86 billion surplus last month.
Yeah, because last month we collected a ton of taxes. But since the debt ceiling passed 1 week ago, our national debt's gone up $420 billion in 1 week. $420 billion.
We did have a surplus last month. That's what I'm saying. Think about this. When's the last time we even had a monthly surplus? Tell me the last time the United States ever even had a month that we had a surplus. We had a monthly surplus that was driven by tariffs.
What does that surplus mean when we all know that we're going to have $2 trillion in deficits this year? That doesn't change the year. That doesn't change the $2 trillion in deficits.
It changes it a lot.
No,
if you're raising, you don't think that raising tariffs, raising like $90 billion was the Wall Street Journal said that this could be literally eliminating a negative effect of that extra surplus when we had incomes rise, CPIs down.
Why don't we just charge Elon Musk $100 billion? We can raise $100 billion. If the goal is to raise money by increasing taxes,
what does that have to do with anything?
Because you're what you just said was we raised tens or hundreds of billions of dollars in tariffs. Tariffs are just taxes on U.S. citizens and businesses. If you're good with raising money by taxing U.S. businesses and citizens, why don't we just raise taxes?
This is a great example because one's mandatory and one's a choice. One's evenly spread. 50%. You want to get into tax? I'm happy to do this. Why tariffs are a much better avenue. It's evenly spread. It's by choice.
What do you mean by evenly spread?
Everybody that buys things pays for them. And not only that,
No, it's a regressive tax. If you're poor and you make $10,000 a year, you're probably spending that $10,000 on necessities. If you're making $1 million a year, you're spending the same $10,000 on necessities, but you're spending
it's still even. Everybody that purchases has to pay. 50% of the United States pays no taxes.
No,
None.
it's a percentage of their. I'm talking about percentage of income.
Okay, I'm not. I'm talking about an even. It's an even tax. It's not. It is not a regressive or a progressive tax scale. It's not done. That's not how it works.
I mean, that's an argument too in America, whether or not an even tax is good, right? Because the current, if you look at our tax code, it's very contrary to that, where if you, to Jay's point, if you only make $10,000 a year, you're not paying any tax. So they're saying if you are making a very low income, we're not going to take tax for you. Versus if you're making a very high income, you could be paying half of your income in taxes. But what AJ is explaining, and what I think what Jay is pushing back on, is that like an even tax, like if you're still taxing the person at 10,000 who's making $10,000 a year, then that's affecting them a lot more than the person who's already paying 50% of their taxes. And I guess that's the argument of like, what is that
no,
fair?
because a
Like,
regressive tax is targeted based upon income. This isn't. This is widespread. Okay, let me ask you this: how much does the 1% pay? How much does the top 1% of the United States pay in taxes? What percentage? What percentage?
Effective or marginal rate?
What a percentage does the 1% pay of all taxes in the United States?
Oh, of all taxes, not of their
tax revenue. How much does the 1% pay?
Income tax, property tax, sales tax. What types of tax are we talking
about? We're talking federal taxes. Federal
income taxes?
Yes. Yep. Out of total revenue. 45%. Guess what the next highest country is? So we want to talk about progressive tax. The next highest is Denmark. We are the highest. Now, guess what country, the bottom 50%, pays the least amount of tax?
That's called a progressive tax.
Exactly. So we are already the most progressive in the world.
So what you're saying is that this is evening it down a little bit.
Yes. If we wanted to go up, the UK, the bottom 50%, pays almost double what they do in America. Denmark, it pays over double. Sweden, it's triple. And Ireland, it's 4 times.
Our rich people are a lot richer than other countries too. We have by far
but that's the bottom. I'm talking about the bottom. So they pay 4 times.
If you're scaling it though, we have a lot more billionaires than any other country, so therefore we're going to pay.
Let me put this into simple terms. Do you think that wealthy people should get taxed on 90% of their income? Is 90% marginal rate too high?
I mean, that's a loaded question, Jay, because we obviously know that rich people help out the tax system by investing in places.
Jay, you're comparing a choice to not. You're comparing a choice to not. You're saying that the government taking money from you at gunpoint versus your ability to choose this or that is the same thing. It's not, Jay. Not even remotely close.
What's the choice? The choice is for a poor mother to choose to give her kid food and clothes and shelter.
2.5%. We are at the lowest inflation rate on CPI that we've seen in 5 years.
I don't understand what that has to do with taxes.
Because you're saying it's this huge tax and it's burdening people. It's not. It's less than incomes by far.
I think it's too early to make a call either way. Like you can't, like AJ can't call it a win right now on 2.6%, and Jay can't call it a win yet. That's saying that like, oh, tariffs are going to burden the lowest income right now, because I just feel like it's too early to tell. I feel like there's a lot of things going on right now that are affecting who's paying this tariff right now. We know someone's paying the tariff, and currently it's not the consumer, but it doesn't mean that it's not going to be the consumer. And the one thing that they keep I can't quite figure out is because it's not like the first time we've ever done tariffs, right? This is not the first time tariffs has ever happened. And so you're like, okay, well, when was the last significant set of tariffs, and what was the effect, and who paid them? So that's what I was like, okay.
The average family paid $1,300 per year in increased costs.
Don't leapfrog me here, Jay. I'm trying to make a point, and you like I'm having trouble with you two this week. getting points out right now. So let me make my point. My point was is you go back to 2018, and the problem with going back to 2018 is if you want to look blanket on the majority of who paid the tariffs, it was the almost entirely borne by US importers and consumers, except for certain industries. So like the steel industry, which was a very like, we're obviously, that's, as being in real estate, that's something we are in tune to. If you look at the steel tariffs from last time, only half of it was borne by US importers and consumers. And so that's what I can't figure out is that, like, if you look at the other data, you're like, okay, this is just a lagging effect, right? Eventually everyone's going to have to pass these on to the US consumer, US importers, the US, as all of the detractors say, US is going to, this is just a tax on the US. It's not a tax on other people. If you look at that data, but then if you look at something like steel, then you're like, okay, well, to AJ's point, if we're raising money and only half of it's coming from Americans and the other half's coming from other countries, like, that's not a bad way to raise taxes. So I guess my issue with it then is there an actual plan? Is there an actual plan here? Because if there's a plan and they've looked at this previously and they've looked and said, okay, obviously there's some negotiation here. Trump is very classic, just saying, hey, I'm going to anchor real high. And then I'm going to, since I'm setting an anchor high, when it comes down to 10% tariffs, everyone's like, oh yeah, that was amazing. When really, like, you got a 10% tariff off of it. He's obviously pulling some of that. But if there is some method to the madness for something like steel, and they know which countries and which areas, and like, why do you go to the UK first to make your deal first? Well, because we actually have a trade surplus with the UK. It doesn't make a lot of sense for us to really hammer the UK because the benefit's not there.
Yeah,
If
but
there's
look,
an actual
look at
method to
what's
this.
happened, and whether there's a method or not, I think we could talk about what will happen, but we can speculate. We know what has happened though to this date. That's what we're talking about. We have the numbers out. We had a surplus in the United States government. Mind blown. The next thing, we have CPI that is almost half of what income raises are. We have tariffs that have not caused inflation. And in 2018 was a perfect example of the last time we had tariffs. CPI was 1.8. So we keep saying things like they're guaranteed to happen, or we know that they're going to happen. And we just act like, oh yeah, this is horrible and everything. They haven't, though. We can speculate what will happen in the future. I was on the board of speculating we will have huge inflation from tariffs. I was there. I believe that fully. I now completely question that because it hasn't happened. And then two, I don't know how you can argue that the trade-off's not good when we haven't had inflation and incomes are up at double the rate. Plus, we had a surplus in the United States government. Up to this date, that's great.
Well, if by August 1st he's got to deal with Canada, he's got to deal with Mexico, he's got to deal with the EU. If he pulls off those three major deals by August 1st, which is his like deadline, like, he might actually pull it off, I guess. Like, to your point, like we might never see the backside of it. But at the same time, if I were to speculate, and you look at the track record, we don't really have any deals. Even the deals that he's announced aren't, they're frameworks, and they're not really deals. And some of them, like, he says we have a deal, and then the country a month later says, oh, I don't know about that. Um, if I were to speculate, I don't think he's going to have all of these deals in the short term, and I think we're going to see it trickle up. And if you ask, there's a lot of well respected economists that are saying, hey, we're looking at mid threes inflation here by the back half of the year. And like, that's assuming we keep going the way we're going. But who could tell, right? At this point, who could tell what's going to happen with tariffs and
I
how
think
they're
they don't
going to.
want to make deals. I think we're waiting. Why make a deal when the numbers are coming in? If I can give a tariff and we can keep that inflation to even, let's say, within the threes, why in the world would we not do that? Like, all of a sudden, no, don't make a deal.
I
keep
mean,
the
because
tariffs.
every month that you're doing this, there's a small business going under. Like I've been tracking. I have this company that's called
More
Wise.
millionaires were created in the last 2 months than ever in history. More small businesses were started up.
At the expense of others, though, I guess is the thing. Like
That's how the economy works.
it's the economy. It's how the economy works. But like at the same time, like I don't know what's fair because someone created a business under a certain set of rules, and there was the kind of the
That's the
assumption.
history of the United States. They change everything all through. The amount of times laws have changed. Think about Obamacare. It destroyed an entire industry. Entire industry wiped it out. So we can't be like, you should never change the rules. Even if it's better for the rest of America, Bob over there, it might do bad for him. But the entire United States is better for. That's not how it works.
I just do think in this case that it's disproportionately affecting smaller businesses. Like Walmart's going to be fine. Like Walmart's going to be fine. Apple's going to be fine. Like the big boys are going to be fine after this. They're just going to shift around. They're going to move around. They're going to like Delta
Small
Airlines
business
is even
sentiment is way up right now.
okay. But my point still remains. There's quite a few small businesses who rely on imports who are getting right now. And the longer this goes on, every single month that goes on longer, there's another small business closing. And to your point, there's more being created. But at the same time, like it's very tough as America being kind of like the beacon for creating a small business, and people created all these small businesses under a certain set of rules with the assumption and like the kind of handshake agreement that okay, like I create a business, we're very small business friendly, and all of a sudden the rules just like abruptly changed. I just hope that he like this administration knows that that's happening, and the whole wait and see, like just because we are the biggest bully on
The
the
Fed
block.
has killed way more small businesses than
Well, that's a different discussion. I agree.
go to the Fed and tell them because I would love that if they'd stop screwing with my
I
business.
agree, but then you could also make the argument the Fed's also only not moving because of tariffs. But I do agree the Fed is doing the same
But
thing at
they
the
did it
moment.
long before we had tariffs.
But at the same time,
They didn't raise rates before we had tariffs.
Of course, they raise rates. That's their job. They raise rates to stop inflation.
but the point is like they flat out come and said, I don't think they're lying when they're saying that they're the only reason right now they haven't dropped rates is because of the uncertainty surrounding tariffs. They're not mincing words anymore. They're all the members of the FOMC who are willing to talk about it have come out and said it. I don't think
No,
it's
I
a
don't
secret.
disagree, but they didn't raise rates and they didn't raise anything. So the idea that the government shouldn't change the rules because one small business may get hurt, I'm saying, yeah, tell that to the Fed because
But
they've
what at
destroyed
what level though? I guess is the thing.
infinitely more.
At what level though, I guess is the thing. I've always kind of been on board with the whole Republican and the taxes and the fiscal policy, obviously up until this bill, which I'm a huge highly against the latest big beautiful bill. But I've always kind of been okay with the Republican idea of helping the economy because as much as people want to complain about it's helping the rich, but it was also always helping small businesses. It was always propping up small businesses, and it's a very American thing to me, and it's one of the pillars of America is helping the small business. And anybody can go and create a business out of almost nothing and become a millionaire just with determination and a good idea. And I just think a little bit with the interest rates, that's a little bit on you if you never saw the possibility that interest rates could rise. But if you started a business 10 years ago and under the premise that importing and like the idea that this kind of tariff thing was going to happen, and with this crazy of like 50% tariffs, 30% tariffs, things like that, and just absolutely your
But
business.
to say that that's on them because they should have never thought interest rates would rise, but it's not on them if tariffs, that's just silly. 2024 had one of the highest bankruptcies of small businesses we've ever seen. It's surged. We're talking about 70% of small businesses reported negative side effects of obviously interest rates. The Minneapolis Fed found that 63% of businesses reported that the high interest rates are going to jack.
I
So, like,
agree. I'm
if
that
you're
that that
talking
I
about a
agree that
teeny amount of businesses, if we want to talk about saving small businesses, I agree.
but that doesn't make it right though. Like that doesn't make the other side of it right. I guess my only argument with that is that that is a normal market function that has been around for a long time. If this happens, we raise interest rates. If that happens, we've historically had high interest rates. It's something that is not unprecedented. This is unprecedented. The whole just raising tariffs kind of out of the blue. We have a new administration, and then executive orders become tariffs, and 30%, 40%, 50%. At one point, it was 147%. Like, that's kind of unprecedented. I just hope, my only point is, I just hope that because I know negotiation. I've read a few books on negotiation. I haven't. The only book I haven't read is this one of negotiating real estate by whatever, some guy from Bigger Pockets. But I've read all the other negotiation books, and I know it's a tactic. Like if you have the upper hand to basically just stay silent, right? Like silence is golden. Like if you don't want to bid against yourself and you want to make the other person kind of bid against themselves and you want them to make two offers in a row. And it's kind of it's a negotiation tactic. And I know that Trump knows this. He's a real estate guy. And I just hope that he considers the fact that he still has to answer to the American public now. He usually has a company where he doesn't have to answer to like boards and stuff like that. He has to answer to the American public. And for every month that he waits for another country to kind of come back at him, that's another month of small businesses
Okay, but you're
folding.
saying answer to the American public, but up until now, was the answer to the fact that incomes are higher than inflation rate, that we had a surplus within the government? Like, I think the only thing that I have here is I have a real big problem that we're discussing this as if this is like this horrible thing, when in fact we haven't seen the results of it. I agree, and I was right there. I was like, tariffs are going to wipe us out. I'm actually admitting that not only was I wrong, I was wildly wrong. And I think that it's so silly for us, but up to this point, we all were. And so it's so silly for us to be like, oh yeah, it's going
We
to be
saw
bad.
negative GDP in Q1. We've seen negative consumer spending in the first 2/3 of Q2. I mean,
Incomes are up 4%. GDP is growing. The negative that we saw in quarter one, tell me, was out if taking out imports, which is just literally, it's an accounting. You're stacking and you're putting on. What was the GDP growth?
okay, so if we don't see a rebound with equivalently higher GDP in Q2, because all that import that was taken out should get put in by now, should all be factored in. No, that's the way it works.
Maybe, yeah, maybe. I don't know. We don't have those numbers.
I guess that's what it comes down to, right? Like
So when Q2 GDP comes out, if it's not significantly higher than average, are you going to admit you were wrong?
Wrong on what?
Wrong
In the
on the
sense
fact
you'll
that
be
tariffs
wrong.
didn't hurt the economy.
Okay, so you're saying that because of that, that the tariffs didn't hurt the economy? I'm not even saying that. What I'm saying is that every single one of us on this podcast were not only wrong, we were outrageously wrong.
I don't think we were wrong at all.
well, but it's too early to tell.
Jay, you said for 4 months we were going to be in a recession that would have massive unemployment. 4 months, a whole quarter. We were doing the countdown because you said we were going to have this ginormous contraction.
So everybody likes to tell me a recession is 2 quarters of negative GDP. We're
That's
at
a
one.
technical recession.
Yeah,
That's
we're
a
at one,
technical recession.
and now we're. It's funny how I've said that for years, and everybody was like, no, 2 quarters when it was Biden, 2 quarters, and now everybody's like, no, that's not really the definition of a recession. I find that funny.
If the definition is that, though, we haven't achieved that. That doesn't even make sense because you have to average
It's
them
too
out.
early to tell. I guess we can argue hypotheticals. I want to wrap this up because somehow we dragged one topic into almost an hour episode. But I want to.
Okay, one quick thing before we do that, because AJ did ask me a question earlier.
All right, Jay.
He was talking about the surplus last month, and he said, when was the last time that happened? And the answer is the last time that happened was 2 months earlier. The time before that was last September. The time before that was last April. Time before that was
So
August.
the 2 months before that was how much?
It was 258
Look how
billion.
high that is. Dude, this is great.
Yes, look at this.
This is amazing. So we've had 2 surpluses in this year. One was huge. We've had no effect.
Wait, can I point something out?
Yeah.
Go back to 2024. We had two surpluses. One was huge, and the other was a couple months later. Same with this. One was huge in April. You notice how this is always April. What happens in April? Might we have a surplus in April? Because of taxes.
So how much of that was tariffs?
How much of what was tariffs?
That surplus.
Very small amount.
I'm comparing the two. We're talking about those two different raises.
But AJ's point is valid, though, that
you're saying that these horrible things are happening. We haven't seen them.
We haven't seen them. That's the point. But at the same point, AJ, I think you would also agree we still have to put yet right. Like give me 2 more months of this, and I will declare absolute no effects.
How long do we have to have negative consumer spending growth before we say this is not good?
Once again, Jay, like that could rebound. You never know.
We didn't have negatives. You say this, we didn't have that. The growth slowed down. We did not have negative.
You are incorrect.
He's talking
AJ.
about consumer spending, not GDP.
AJ, you are incorrect. I showed the data. It was negative. It was negative 0.9% last month. Negative contraction.
Okay, what are you looking at? I'm looking at this one right here. So consumer spending for last month. And then 2, pull up how many times consumer spending goes down.
Well, let's start with the first question. You wanted to pull up last month. Here's last month. Last month, we were down 0.9%. The month before that, we were down, see the negative, 0.1%.
Okay, but that is quarter to quarter.
That is not. That is the monthly number.
So the total PCE right here, May, we had down 0.1. April was 2, 7. February was 3.
Yeah, but then March throws it way off. I guess that's the point, is that we can't really call a trend in this spending, like in this economy right now. Like I feel like you can't, like 1 month you can't derive, even 2 months you can't derive anything. Because if you look at the month before, it was up so much. That could have just been people like, oh, I'm going to buy a shit ton of stuff right now because I don't know what's going to happen with tariffs, because he's threatened all these tariffs. And then now these next 2 months, they're just have so much stuff that they bought, like they're just not buying it.
That's what I'm saying. What I'm saying is right now, these that you guys said, that I said, I'm in this boat. We said all of these things were going to happen. And to say that they haven't, go listen to our podcast. Go listen to every single topic time we've talked about this. We all thought that this was going to happen. We all did. I thought it was
going to happen. And we could still be right.
And we could be. But that's what I'm saying. Up into this point, we are not. Up until this point,
correct. We were very fortunate that Trump did the taco trade and backed off for 90 days. We're very fortunate.
We have 100% increase plus in tariffs. We have the tariffs right now that we are seeing are unprecedented.
100% increase of a small number is a small number.
Okay, wait, but you just said tariffs are hurting the economy. So are they not hurting economy, Jay? You keep switching your argument.
They are hurting the economy. We were just looking at retail spending data that is negative growth for the last 2 months and was down 60% from Q4 to Q1. Literally, that is the single biggest indicator of economic health.
An indicator of economic health is like, but it's not the only indicator.
The one that factors in biggest in the data.
No, that's not.
It is. What is the single data point that we use to measure the economy? What's the single biggest data point that we use to measure the economy?
GDP growth.
GDP. What is 70%? What is 70% of GDP?
Consumer spending. We get it, Jay, but it's also 1 month, and we also know we've had other discussions about monthly. You can't tell a GDP. That's why they only do quarterly. And so I guess the point is right now, the point that AJ is making, if we raised all this money and it ends up not hitting our consumer, this was an awesome win and everything's going to be great. But if we raised all this money and all of a sudden all we did was put off the effects, and these effects hit next month, the month after, and it tanks the consumer, it tanks our economy, or it has any other negative effect, I don't think it was worth it. But at this point, it's too early to tell. A month from now, we will look at it again. And once again, the data will come out. The right will say, this and the left will say that, and then we'll wait one more month, and then hopefully by August or by September, when we get to the next Fed meeting, we'll have a better indication, and hopefully lumber prices will come back down, because that's what I need.
At the end of the day, there are three metrics that we care about.
Jay, I know you always want to have that last point, but I think we're wrapped up. Because you're going to say something, then AJ's going to say something back, and then we're going to get back into it, and I think we're done. You good?
Okay. I just want to point out that corporate corporate is the thing that we haven't mentioned here.
Okay. All right. Fair. Maybe we can talk about that next week. We get PPI. We'll have another discussion about it, or maybe next week we'll have an actual real estate discussion. That would be novel.
That would be.
Who cares about real estate
here? I don't think we do that here.
All right. We're over an hour somehow with one topic. I'll throw out. You know what? I'm going to do I have this list here that I didn't get to kind of bring up. So I'm going to do it as my top 10. It's actually, there's only 8. But I'm going to do my top 10. And because I got a little confused, and I think a lot of people are probably confused, of what tariffs are actually on right now, and what tariffs are threatened, and what tariffs are pushed off. So I'm gonna do the top 8 tariffs, and I'm gonna have to bucket some. Obviously, there's more than 8 countries in the world, but this is the top 8 tariffs currently enacted, or postponed, or threatened. Okay, so we'll start with various countries, obviously coming in at the end. Various countries. We don't really know the list of all the countries, but they currently have an August 1st deadline for their higher tariffs. Trump hasn't put an actual number on any of them. He just says they have until August 1st to figure that out. Coming in number 7, we currently still do, as I pointed out before, have a 10% tariff on most countries other than Canada and Mexico. So that was the Liberation Day tariffs, and we could say about, okay, Trump backed off the tariffs. Well, we still do have 10% blanket, and to AJ's point, that's bringing a lot of money. 10% off the top of everything. So that's number 8. Then we can go to currently, we have Mexico, Canada, and Venezuela all tied at 25%. Now, that could be very quickly changing, because for some reason Trump just came out and said he's going to do 35% on Canadian imports. I don't know what pissed him off this time. Last time it was the digital tax that Canada was doing. He pissed him off. He threatened 50%.
His maple syrup was bad. His maple syrup was not good.
But then Canada walked those back and actually caved on them, and didn't do that digital services tax. But still, for some reason, and he didn't give a reason this time, he just said, we're going to make it 35% instead of 25%. And he also has been barking at Mexico. So who knows on that one? But Venezuela, they're at 25%. EU, the 30% tariff. Now that has been postponed till August 1st, but he has used the percentage of 30%. I don't know why. So that's coming in at number 2. And then the number 1 tariff. I guarantee AJ knows this, so I'll throw it at Jay. What do you think the current highest tariff? It has been postponed, but the current highest tariff out there right now?
Brazil,
50%. Which I don't want to get into it. I don't like why he's actually 50%. Apparently, tariffs just solve everything. They're going to solve a war. They're going to solve political persecution in other countries, and they're going to solve the U.S. economy. So those are our current level of tariffs. Currently, it's 50%. That's a lot less than 147. So we're making progress. Jay, any hypotheticals, or are we just done with that segment?
I haven't looked in a while, so I don't have one. I will have one next week, I promise.
I've heard that before, but it was fun while it lasted. I thought there was a few good ones in there beginning. My favorite's still, $1 billion and you can never live Idaho. Would you take it?
I'm curious. So AJ, $1 billion, you can never leave Idaho.
We already did this.
No,
he's not doing it.
Was it Idaho?
I'm not doing it. Yeah, I'm not. I don't think it was Idaho. I think it was something else. But even Idaho, I wouldn't.
Yeah, I think we did. I think we did Ohio or something, and I think we can all agree. I think we can all agree $1 billion isn't enough.
I bet you there's a state though. I bet you there is a state where you say yes. Like I feel like it used to be Florida, but Florida's getting too hot. Like it's unbearable some in the summers now. But like if you move up the coast a little bit, maybe where so like you have your beaches, but then the weather you still like
But you can't go to other countries. Like
for $1
I
billion,
just love
like you could
traveling.
just kind of like what are you getting in other countries that you can't get for $1 billion? I guess
Culture.
you bring it in, like create a Chinatown in your like create AJville, and part of it's Chinatown, part of it's Little Italy,
A
part of
billion
it's
doesn't go
like
nearly as far as it used to.
well, that's true. There is a certain amount of money and a certain state that you would say yes.
At some point, yes, you're right.
Yeah. All right. Plugs. AJ, what do you got for us? You got to have something going on. You're always somewhere different. And
Yeah, we have our tech fund that we've launched. And I'm down here with our tech company. We're raising for three of our software systems. We have three of those, and so it's a really cool opportunity because it's never been done in our industry, and it's not something you can just get. So you just can't invest in those companies. We have all the shares and bring them in. We're really excited about it. We got permission to offer it to our investors. They're companies that we own and have used, and so check it out.
if you find anybody who's just got a big tech fund that is investing in your fund and they're looking for other things to invest, throw us a bone here. We could use some money too with Conference Connect. Jay, what do you got, buddy?
Yeah, I was going to say Conference Connect. So I'm going to be at Limitless, the conference in 2 weeks in Dallas.
Nice. The Gaylord.
The Gaylord.
Excellent hotel.
Yes. And then Bigger Pockets is coming up in a couple months. Anybody that wants tickets to Limitless to join me there or wants tickets to Bigger Pockets in Las Vegas, I can get you 10% off. Go to Conference Connect, conferenceconnect.com. Look up the Bigger Pockets Conference or Limitless Conference. Use the code CONNECT10 and get 10% off your tickets. And I believe that should be good for a whole lot of other conferences too. What I recommend is anybody that's looking for a conference, start at conferenceconnect.com and connect 10 to get 10% off.
If there isn't currently a discount on a conference you're looking at, you could actually just hit the, hey, I want a discount. And we have a team that negotiates discounts.
Send me an email. I'll take care of you.
All right, cool. Yeah, I guess I'll just plug my wife then. She's been working her ass off too much. I see her less and less, but I'm proud of her. She's of everything she's doing right now. And so I got to give her a plug. Go follow her, check out what she's doing. Badass Investor on Instagram and on YouTube. She's also going to be at Limitless. You can check her out on stage there too. And yeah, she's much better looking than Jay and smarter. So if you're going to follow someone, go follow her.
No doubt.
All right, guys. I enjoyed it, even though I was hoping this would be like a 45-minute episode. We still stretched it. I always enjoy my time with you.
I don't want to have just 45 minutes with you guys. I want to take as much time as I can get.
Hey, AJ, we appreciate you, even though you're in the closet, coming out of the closet for us.
You know what? For you guys, I'll come out every once in a while.
All right. Hopefully we get Mauricio back next week. We get
that's right. I forgot about him.
Yeah.
I barely noticed he was gone.
I mean, it was a good episode for him to be gone because when we get a little heated there with the arguments back and forth, he usually just shuts down anyway and disappears. So it was kind of just the same as always. So but we do miss Mauricio. He's I don't even remember what he's doing. He's off having fun. He's living his life, living the dream of selling a company and
buying a ranch.
Yeah, buying ranches and stuff.
With no animals.
So we miss you, Mauricio. But hopefully you're back next week. And hopefully everyone else comes back. We appreciate you listening. Like and subscribe.
Hey, next week, are we doing our updated predictions episode?
Do we have to do predictions? Like, I don't even want to. I keep putting that off.
People love that. It's like one of our highest rated episodes.
How can you fucking predict anything right now, man?
Yeah, that's the fun thing. We can't. We just make shit up. That's why I enjoy it. I can say whatever I want, and nobody cares if I'm right or wrong.
I'm just gonna, you know what, to the point where I'm gonna have my beliefs, and I'm just gonna say the exact opposite because I got a 50% chance of being right either way. So
we need to start betting. We need to start betting on our predictions.
Yeah, betting fun shit. Though,
I'm down with
not
that.
money. Like let's bet something funny. All right. Sounds good. Maybe we'll do it next week. Maybe not. We'll have to discuss with Mauricio. But either way, you guys should come back next Thursday. Hope you're all there. I will see you next Thursday.
See ya.
Yeah.